How's it going, everybody? This is Naz, aka the Pup, and this video is going to serve two purposes. We're going to do an earnings preview for next week, and I'm also going to show you how I get ready for charts that basically are untouched on my system. So I thought this was a really great way I can give you a little peek behind the curtain in terms of how I, map out my trades and how I apply technical analysis to charts, and also how I use TrendSpider, which I think is a fantastic platform and software. So let's take a quick look at earnings. So next week, we've got a decent amount of earnings on the table. I'm obviously not going to go through a lot, but let's say we have AutoZone, Anaplan, Box, Autodesk, WDAY, Costco, OKTA, Salesforce, Ulta. I mean, some of these we are trading on a weekly basis. Others I just kind of watch. So let's take a quick look at some charts. So for this purpose, for this video, we're going to go through Anaplan, AZO, AutoZone, WDAY, WDAY, Box, Costco, OKTA, CRM, and VEEV. So basically what I did before I started this video is I wiped any notations that I had on these charts. And for this particular video, we're just going to focus on the weekly as it is Saturday and the week candles have closed. So let's start with Anaplan. So I'm not really going to go too much into fundamentals. This is really going to be strictly a technical analysis video. And so yeah, it looks like we've gotten this dip like most of the other stocks that we've had during this pandemic. So one of the first things I do, I'm a really big proponent of the anchored VWAP from Brian Shannon at Alpha Trends. So what I'm gonna do, neat tool from TrendSpider here is the volume by price. It gives you an indication of how much volume is at a particular price. So you see I moved it to this move down, and you can see price is congregated around here, and we're breaking through. I also have moving averages on. Right now I use blue for the 50 simple moving average, red for the 200 simple moving average. Since Anaplan IPO'd back in November, there's just not enough data to show the 200 simple moving average. So we're just gonna work with what we have on the chart. So I thought this was an interesting close here for Anaplan. We closed over the 50 simple moving average. That's a very bullish sign. So one thing we can do is turn on our trends. These are auto trend lines from TrendSpider, and it kind of gives you a nice basis, a starting point of how you can use technical analysis and trend lines to determine where our trend is. So for this particular example, I'm just going to take off some of these trend lines here, and we'll start with this broadening formation. Now, if you double click these auto trend lines and you turn trends off, you see that we kind of, we're left with this. And I'll do that one more time really quick. I'll turn these off, and I will put the drawings back on. I always forget where this goes. I'll turn trends on. Here we go. See, I've removed some trend lines. I'm going to restore all. So the other thing we could do, instead of deleting the ones like I just did, I can just double click, and then just turn the trends off. And here we go. Here's our broadening formation. So one thing I could see right off the bat is, we broke out of this formation here. We retested, broke back down, retested, and sold off hard, okay? And we found some support down here, and now we're moving our way back up. So what can I potentially see happening here? So, I mean, it's very possible now that we're over the 50, we can possibly make our way back up to this trend line right here. So that's certainly a possibility, and with a good earnings, that could push price on its way over there. And I'm going to actually move our volume by price over a bit, just so I can have a better indication of what price has been doing since we've IPO'd. So yep, so you see, like, we're in this zone right here since the IPO in terms of volume. We're in this nice supply zone right here. So one thing we could see happen is we could consolidate and then break to the upside if we have a good earnings report. And we've had a run into earnings. So you see these last 3 weeks, we've had bullish candles. So we could have a great earnings and just run sideways or even dip down. Maybe this is priced in. We just don't know. But this would be one way I would approach looking at a particular chart like this. Okay, so let's look at AutoZone. So AutoZone, again, we are trading over our 50 moving average and over our 200 simple moving average. So here's a nice bullish crossover right here. This could have been an indication where, I call this, and a lot of traders call this the golden cross. So I'm going to just notate that. Golden cross is basically when the 50 simple moving average crosses over the 200 simple moving average. And so you can see now we're getting a bit of separation here. And like most of these stocks that we're going to look at, we had this pre-pandemic high, and then the huge sell-off and a V-shaped recovery for the moment. But you could see once we lost that 50 moving average, we came down, we lost the 200, but that next week we quickly regained it, retested and lost it again, and then that following week we retested it, broke out and retested it, and now we're off to the races again. So closing over the 50 moving average is definitely a bullish sign. We can use the 50 simple moving average in essence as a stop loss if we were to enter the trade here. We had our golden cross. We see that we've created the supply zone of volume right here. So I think this is an interesting trade. Again, I'm not a big proponent of trading earnings. If I had profit going into earnings, I probably would take most, if not all of it, but I would not be buying any stocks or options for an earnings play. All right, so now let's take a quick look at Workday. Again, very similar pattern here. Pre-coronavirus pandemic. Now we have the sell-off. Actually didn't sell off as hard. It looks like we had a nice bounce up over here to this 200 psychological resistance level. So that's another thing we could talk about. Round numbers tend to be psychological barriers. So here you could see price came up to 200, sold off, retested, broke out, broke down, retested, broke down. Now that support, which was here, turned into resistance, which is here. We came back, we retested 200 again, broke down hard this time, down to 107. Crazy sell-off. Now we're on our way back, and we see the 50 moving averages coming up. So I would see this as an area of interest. Be curious to see if we retest this 50 and break down some more, or retest it and break out and try and retest this $200 psychological level again. But that's what I would look for in terms of Workday. Okay, so let's look at Box. Box is a storage. It's kind of like a Dropbox competitor. So here we see like a sustained downtrend. If we draw our trend line here, you could see a touch here, a touch here. Don't get a quite a touch here, but we're actually, the 50 moving average is acting as resistance. So resisted here, resisted here, resisted here, resisted here. We broke out of our downtrend, and now we've actually closed over the 200 simple moving average. Now, I don't like that the 50 is under the 200, but you could see it looks like we're about to start curling up. So if we have a positive earnings report and price continues to move up, and let me move the volume by price indicator over to our previous high. Actually, I'm going to use it to the previous high open, which I like to call the swing high. Okay, and yeah, so look, so we're holding below this gap right here, this volume gap, which is really interesting. So if we were to enter this gap, it's very possible that price would shoot right back up to this supply zone. So we have our demand zone down here, but with this volume gap, what I generally do on my charts is I'll just put a vol gap or volume gap just for a visual reference. But price will tend to shoot, if we enter this volume gap here, price will tend to shoot up pretty quick. So this could be a play where if we set an alert, let's say over $20, so I'll create an alert, I'll do breakthrough, touch, and bounce. What's great about TrendSpider and their tools, specifically with the alerts tool, you can create sensitivity around an alert. So you see how as I make the sensitivity higher, it's broadening the range in which the alert system will actually capture price. So if I were to, let's say, do a 50% margin, and we're on the daily chart, I would actually move the sensitivity of confirmation to the 30-minute chart. So once the 30-minute candle closes within this range, it's going to actually alert me that we're approaching this $20.22 level. So what I generally do, because these alerts come over as a text or SMS message, I will put the name of the ticker, which would be box, and then I would say, you know, watch for break of $20. And so if this, and you know, I would do an expiration, I would make this valid for 30 days, I would make it trigger 20 times, create the alert, and now you see the alert is created. So I can kind of set it and forget it. I move on, I go on with my day, and Tuesday opens up, and if box hits this number, the TrendSpider system is going to alert me, and fantastic. Now I can actually look at whether or not I want to enter the trade or not. All right, just another really neat aspect of TrendSpider with their alert system. So let's look at Costco. Costco's been an absolute beast. I mean, it's actually, if you just look at the trend going back, let's say to 2008, I mean, wow. So from 2008, we were around $45, and it's just been one steady climb, with it getting even more vertical after 2007. So yeah, look, we've been riding this 50 moving average. I think buying dips to this 200 has been really, really good for longs. I mean, we don't quite touch it here, but once we passed up here, I mean, we're just riding this 50 moving average, and we're continuing to ride it. So let's see where we should anchor our volume by price. I'm going to do it right from this previous low in December of 2018, and you can see we're actually forming a symmetrical wedge here. So let's just do this. And I'm not gonna fiddle over this and make it perfect, but I'm just doing this for purposes to show you guys how I use TrendSpider to make these tools tell the story of what I'm particularly seeing. So right now we have a symmetrical triangle on the weekly chart for Costco. Very possible that once we have earnings, it's gonna break one way or the other. If we have, and listen, I'm anticipating Costco is going to have pretty good earnings. The question is this run up from 280 to 320, is that price built in? I think that's really the question that we have to ask ourselves. If it is, and we wound up consolidating, so be it. If we wound up dropping, I would watch for a retest of the bottom of our symmetrical triangle and or this 50 simple moving average. I think that would be a good place to start, and we take it from there. All right, so moving on, we're going to look at OKTA. OKTA has been a phenomenal performer. Kind of got alerted to this back in, I think in 2018. I subscribed to a service called the Motley Fool Rule Breakers, and I believe Rule Breakers alerted me somewhere in the 30s, I believe. Somewhere around here. And you know, I didn't have too much fundamental knowledge on OKTA, but sure enough, we've had this phenomenal run riding this 50 simple moving average up, and I've learned more and more about OKTA over the course of the last couple of years, and I believe what their service is handling login security for people logging in online. So they handle all the back end. Apparently, it's a really easy plug and play system that can plug into most corporate systems for user security and securing their back end cloud databases in terms of access. So you see, we had a nice kind of move here. Once we broke out of this 140 range, we absolutely just launched. So you see, price ran up to this 140 range and sold off, ran up some more, sold off, and now we finally broke out here in April, retested April 20th, and now we're off to the races again. So where are we going? How can we find that out? So one thing we can use is our Fibonacci tool to get an extension. So over here on the left, we have Fibonacci. We would start with our previous swing high, bring it down to our swing low here, and now we've got some potential areas of interest in terms of price, right? So let's take a quick look. So we have our 1.236 Fibonacci extension. Well, sure enough, price came right to it, sold off, and then broke through. And then what was the next level? The 618. So let's draw a line there. And then looks like our next level would be the 2.236. And the next level would be the 2.1618. Okay, so now let's turn off our Fibonacci and let's just take a quick look. So sure enough, we hit this, we bounced down, we broke through, and where did we go? Right to the 2.618, broke down, resisted, came down, retested, and now we're off to the races again. So I think 209 is our next stop. For sure 200 because that's our psychological level. And if we break through 200, then 209, and then 230 after that. I think it's just as simple as that. I think OKTA is just one of those companies that, because of the nature of how business is done and the nature of the use of the cloud and securing online access to cloud-based softwares, I just think OKTA is going to be a gold standard moving forward. So something to keep an eye on. Maybe buying pullbacks to the 50 might be a good way to trade this. Everybody's got their own trading style. All right, so CRM, let's take a quick look at that. CRM, or Salesforce, the gold standard in content management relations software. You could see buying this 200 moving average, simple moving average pullbacks has been really, really profitable for long-term trades. You could see we had some support down here, some horizontal support right here around the let's call it the 115 level. And then we had some top line resistance here at the let's call it 167 level. So you see price bounced around in this kind of range. Sometimes I put a range box just to kind of illustrate where price has been, what's been going on with it. And you could see we broke out here in early January, retested, sold off with everything else during the COVID pandemic, and now we're having this V-shaped recovery. Now we're outside of this top line again. So let's keep an eye on what price is doing. We could draw a downtrend line. This is where price has been resisting. So maybe we kind of form some kind of symmetric ascending triangle or descending triangle to see where price is going. Maybe we consolidate in this area, or maybe we have a fantastic earnings report and it just launches us further into space. All right, and finally we're going to look at VEEV Systems. Again, how could we have played this? Well, look at this downtrend line right here. We mark up two wicks that touch. And, we had a false breakout here, sold off, came right back to the 50, hugging the 50, broke out again, sold off under, and now, wow, just incredible run right here. Not much more you can say about that. Where is price going? Let's use our Fibonacci tool, see where price can potentially go. Sure enough, we hit our 1236 area, and now we're trying to retest that. Where are we going next? Probably, well, we've already hit $200, so we may consolidate a little bit here, and then we would go maybe to 214, 250, 273. So that's it. That's an earnings preview for these handful of stocks that are going to be having their earnings reports next week, and this gives you a little peek behind the scenes in terms of how I use technical analysis and how I use TrendSpider to achieve this particular type of technical analysis. They've got a lot of fantastic tools. Everybody, trades a little different. We all use similar tools, but maybe use them in different ways. And, what's great about the software is they're continually upgrading and adding new cool features to it. I can do video on top of video of all the cool, neat little tools that we can use and how to determine where price is going and where it's been. And this particular weekend, happy Memorial Day to everybody that celebrates here in the U.S. We're having a 35% off of their plans for TrendSpider. I would highly recommend, at the very least, do the 7-day free trial. take it for a test drive and see how you like it. I personally love it. I've used other softwares in the past. They've been more than adequate, and there's a lot of them out there that'll do a similar job. I just like the user interface. The UI is really sexy. It's really nice. It's really easy to use. They're constantly upgrading the software. They have some really neat proprietary tools that I like to use that you're not going to find on other softwares. And yeah, that's my story, and I'm sticking to it. So once again, this is the Pup. I appreciate you taking these 20 minutes to stay with me in this earnings preview and TrendSpider overview. And if you have any questions, feel free to reach out to me. I'm going to throw a link in the post here so you guys can check the software out and hopefully take it for a test drive, and we'll go from there. Enjoy your long weekend, everybody. Have a good one. See you on Tuesday.